wouldn't be terribly surprised if by the end of the month, which is not that far away, that's literally less than a week away, okay? Next Tuesday is the 30th. That's going to be the end of the month, end of the quarter. If we are coming back down to at least try to get to 6,550 or 6,500, that could offer a decent level of support. But I still make my argument that this market has stretched a long ways away from the 21 period moving average, and mostly I'm watching the stretch away from the 50 period moving average. It is not only in time, but also distance. The last time we were this high above it, we had a 3.3% correction on July 31st to August 1st. The last time we actually tested this level, we were sitting here. We're above the 50-day right here, and that stretches out about 90. Actually, no, now it's 100 bars. Wow. So right at about 100 bars. The last time we tested this would be a touch of the 50 period right here, and we're talking about 95 bars. That is a lot. There have been more times at higher bar counts. We've seen a 102, a 105, a 112, and a 128. That goes back, 30 plus years, 40 plus years. So it's not very often that we get and move that far away. But what I noticed is if you go back in time and look to see how many points higher we are, rarely are we 250 to 300 points higher. And right here, when we had this big pullback, this market was about 280 points higher than the 50 period. It's about 280 points. We had a nasty 3+% correction. This push up into the FOMC breakout candle is pushing up into like the 270s. And again, I was kind of calling the market's bluff, at least in the short term. If we pull back to this level, we're 270 points away. I'm not saying it can't go higher, but it seems like at least a pause, at least a pullback, maybe not breaching 6,700, 6,750 by the end of the month, end of the quarter. And if we do make a follow-through run with some of this negative gamma, this could continue to perpetuate a cascade to the downside, which maybe comes back and fills this gap post FOMC, possibly comes back into FOMC lows and gives that JP Morgan collar trade and gamma pin around 6,500 a chance to get hit. So in the near term, that's what I'm looking for. This could all be pointless if we're back above 66.70 by the end of today. So I'm doing this video before Tuesday's close. If we stay here below 66.70 and futures market starts to unravel a little bit overnight, we might come into a gap lower on Wednesday. This might continue to be, more weakness, more selling off. It might drive some traders crazy, like, what the heck just happened? I just bought at all-time highs, right? But technically, this market was overdue, and we're finally getting it. I'm hoping that's the case. Look, I want to position for dips.